In recent years, while governments have often emphasized external threats to national security and individual freedoms, there's an argument to be made that one of the most significant challenges to freedom comes from within. This challenge is embodied in the growing global interest in central bank digital currencies, or CBDCs. As digital technologies become increasingly integrated into our daily lives, the potential for government control over digital money has emerged as a critical issue. In this video, we will delve into the concept of CBDCs, what they are, and how their adoption could pose a serious threat to personal freedoms. Moreover, we'll examine which countries are leading the charge towards CBDC implementation and what you can do to protect your privacy and freedom in this rapidly changing landscape. To understand the implications of CBDCs, it's important to first grasp what they are. A central bank digital currency, or CBDC, is a type of digital currency issued directly by a country's central bank. This is in contrast to most digital money today, which is technically created by commercial banks. When you deposit money in a bank, the majority of it isn't held in physical form. Instead, it exists as digital entries in the bank's ledger. While these digital transactions are facilitated by commercial banks, the physical cash we use is considered the only real central bank money. As society moves away from physical cash and more towards digital transactions, central banks are increasingly concerned that they could lose control over the financial system if commercial banks and tech companies dominate digital currencies. This is where CBDCs come into play. Essentially, CBDCs are the digital equivalent of physical cash, but under the direct control of central banks, allowing them to maintain their grip on the monetary system. While on the surface, this may seem benign or even beneficial, especially in terms of efficiency and security, the reality is that CBDCs introduce a whole new level of government control over personal finances. One of the most concerning aspects of CBDCs is the potential for government surveillance and control over financial transactions. In a revealing admission, European Central Bank President Christine Lagarde acknowledged that the digital euro could be used as a tool for controlling individuals' financial behavior. While central banks and governments often claim that CBDCs will maintain a certain level of privacy, it's crucial to understand what this really means. In many cases, the promise of privacy only extends to protecting individuals from scrutiny by commercial banks, not from the central bank itself. This means that while your local bank may not have access to the details of your transactions, the government could potentially monitor every digital purchase you make. The concern about CBDCs is not just about privacy, but also about the level of control they could grant governments. Unlike physical cash, which allows for anonymous transactions, CBDCs are inherently traceable. This opens the door to a range of potential abuses, from tracking individuals' spending habits to outright financial censorship. If a government doesn't approve of how you're using your money, they could theoretically freeze your digital account or impose restrictions on your spending. The danger of such a system is evident when you consider how this power could be used to suppress political dissent or enforce social control. As central banks explore CBDCs, two primary models have emerged: wholesale and retail CBDCs. Wholesale CBDCs are designed for institutional use, mainly between banks and large financial entities. In contrast, retail CBDCs would be available for everyday use by the general public. While retail CBDCs have garnered the most attention and concern, particularly for their potential to infringe on individual freedoms, central banks have faced considerable resistance in rolling out these types of currencies. Take Nigeria's e-Naira, for example. The government launched the digital currency with hopes of widespread adoption, but the response from the public has been tepid, to say the least. Despite extensive efforts to promote the e-Naira, the majority of Nigerians have resisted using it, preferring to stick with traditional forms of money. This kind of resistance is being seen in other countries as well, leading many central banks to shift their focus toward wholesale CBDCs. Wholesale CBDCs, while less intrusive in the day-to-day lives of individuals, still present risks, particularly in their potential to bypass traditional financial systems, such as the reliance on the US dollar in international trade. The global landscape of CBDCs is evolving rapidly, with many countries at different stages of development and implementation. In North America, the United States has been slow to adopt a formal CBDC, largely because the issue has become highly politicized. Republican lawmakers have expressed concerns that a US CBDC would infringe on individual rights and freedoms. Nevertheless, the Federal Reserve recently launched FedNow, a real-time payment system that some speculate could lay the groundwork for a future CBDC. Meanwhile, stablecoins are becoming increasingly popular in the US, but these also carry similar risks of government control, as they are often backed by central bank reserves. In South America, Venezuela attempted to launch the Petro, a cryptocurrency tied to its oil reserves. However, the experiment largely failed, and the government has since shifted focus. In the Caribbean, the Bahamas introduced the sand dollar, one of the first retail CBDCs, but adoption rates have been low. This suggests that, even in smaller economies, there is resistance to government-issued digital currencies. Africa and the Middle East have seen varied responses to CBDCs. Nigeria's naira, as mentioned earlier, has faced significant public resistance. However, countries like the UAE and Saudi Arabia are focusing on wholesale CBDCs, particularly for cross-border trade with other BRICS countries. In Israel and Iran, CBDC pilots have been conducted, but neither country seems eager to be the first to fully implement retail CBDCs, preferring to wait and see how other nations proceed. In Asia, China is leading the way with the digital yuan, which has been in development for several years. Although domestic adoption has been slow, China is actively pushing for the digital yuan's use in international trade, especially within the Belt and Road Initiative. India, on the other hand, has seen more success with its digital rupee, which already has over 5 million users. In Europe, the EU is pushing ahead with plans for a digital euro, despite significant public concerns about privacy. The UK, after facing a public backlash against the idea of a retail CBDC, has shifted its focus toward wholesale applications. As central banks around the world push forward with CBDCs, it's clear that this technology is no longer a hypothetical concept. It's becoming an inevitable reality. While some countries may focus on wholesale CBDCs for now, retail versions are likely to follow. This raises significant concerns about the future of financial freedom and privacy. With the ability to track and control every transaction, governments could use CBDCs to limit financial autonomy and suppress dissent. Moreover, the line between stablecoins and CBDCs is becoming increasingly blurred, making it difficult to see how one could avoid the potential for government overreach. Despite the looming threat of CBDCs, there are still actions individuals can take to protect their financial freedom. One of the most effective ways to push back against CBDCs is through political action. Voting for candidates who oppose CBDCs and participating in public consultations can help slow down or even stop their implementation. Another simple yet powerful step is to continue using physical cash. By refusing to let cash be phased out, you help maintain a system where anonymous transactions are still possible. Finally, if and when CBDCs are rolled out, non-adoption could be a form of resistance. Just as Nigerians have largely rejected the naira, other populations can choose not to use digital currencies forced upon them by their governments. In conclusion, the rise of CBDCs represents one of the most significant potential threats to personal freedom in decades. While central banks may promote these digital currencies as efficient and secure, the reality is that they offer unprecedented opportunities for government surveillance and control. The best way to combat this threat is through awareness and action. By staying informed and taking proactive steps to resist CBDCs, individuals can help ensure that financial freedom is not eroded in the digital age. If this issue concerns you, make sure to like, subscribe, and share this video to help spread the word.